Hi there, welcome to the Story Series. I'm your host, Andrew Turquez, and the Story Series is a show where we dive into the stories of successful individuals, their businesses, and how stories played a huge influential part in making those businesses happen. And I'm with the father of the business that we're in right now, and the reason that most of us would say that we're here, or the only reason that we're here.
It can't be the only reason.
The founder of Alterra Home Loans, the father of Panorama Mortgage Group, Jason Madiedo. Jason, thank you so much for being here.
Thank you.
Appreciate that.
It can't be the only reason. The why we're all here is the reason, hopefully.
Absolutely. Well, the mission is kind of, the driving force that keeps us here. But I think that it goes without saying that the efforts of a few ended up being the benefit to many. So thank you for what you've done and committing yourself to that mission. And I want to start with obviously your story, but the story that probably influenced a lot of the decisions that you made while you were growing in this industry, which is your mom's story and how 100%. She came to this country with damn near nothing and built herself.
$70.
$70 is a lot. When you
Dan, in the early 70s, it was not a lot.
So tell me a little bit about her story and obviously some of the challenges of coming to America as an immigrant with not a lot on your plate.
It's the challenge of many, right? So you think about immigrants coming to this country, and I mean, just picture yourself telling yourself, this is not where I'm at right now, isn't going to be where I can thrive and create something better and bigger for my family, yet let alone also create a legacy. And then be able to launch that, right? To take off so that generationally, even after me, we will have familial success and generational wealth. So picture yourself thinking about that and then telling yourself, the only way I'm going to achieve that is if I leave my country, my comfort, and go to a whole new country where I don't even speak the language or fully understand the culture. And then throw on top of that, I don't got money. And so the answer is I don't actually know what that's like, because people like my mom have blazed the trail for so many of us, or created the opportunity for so many of us by taking that massive level of risk that I don't even see myself being able to take. As a person, right? Leave the U.S., don't take any money with me, and figure out how I'm going to create wealth for generations to come. Yeah. That's the kind of person that I think she is, and I think that's the story of many as well.
Do you think that, and I love what you said, I think it's beautifully put, that you can't necessarily put yourself in the mindset or understand the risk and the thought that went behind making a really difficult decision like that. Do you think that while building Alterra, while building your own business and Panorama, do you think that you felt a sense of duty to your mom to almost take the baton and keep running with it? She ran the first leg of the race, and a lot of people would say the most difficult part of that race. Do you think that you felt a sense of obligation, or not obligation, but duty to generational wealth to take it even a step further?
Yeah, 100%. It's from day one till today, a big driving force, other than what we're trying to accomplish, is making her proud of going, hey, you made the right decision by coming here. And the only way I can repay that is by working what I would think harder than you work in trying to achieve something, or, taking more risks, or taking, different types of risks to try to achieve what you envisioned, what she envisioned to happen. So it is my duty to honor that.
Now you spent a lot of time around her while she was building her business in mortgage, right? Can you talk a little bit about the story of how she got involved in mortgage? And, I personally know Edie, so I know that she's one of the purest people in the world. You can't really sugarcoat anything with her because she'll tell you how it is.
She's hardcore.
She's pretty hardcore, right? And so tell me a little bit about the story of young Jason spending time with his mother inside of those environments where for her, it was make or break. And for you, you're getting in industry look inside of what mortgage did and
Yeah. All right. So I'll fire off, and hopefully something will come out right. But, so she got into this business like many people do. It wasn't the industry that she said, "Oh, I'm going to go look for it." Right? Somebody referred her, told her that she should try this business. A friend, right? And many people get in this industry that way, where it's by accident, kind of.
Mm-hmm.
What I saw as a kid, number one, I didn't like. In order to be successful in anything, but especially in a business where you eat what you kill, basically, right? It was. I don't know what time she got up and left in the morning. I knew she came back and picked me up at 7:00 in the morning to go to school, and then I knew my aunt would pick me up from school because she was busy grinding. And then she would pick me up from my aunt's house around 10:00 at night, and we would go home, go to sleep, and rinse and repeat. On Saturdays and Sundays, I just went with her wherever she was going. Typically, that was prospecting. That was going out and handing out business cards. So I'm here, 8-year-old, helping her hand out business cards, put flyers on cars, getting kicked out of shopping centers, right? Whatever it took, going to real estate offices. And, as a young kid, you don't have an appreciation for that, because what happens is you don't have your parent. I mean, you do, but you don't have the time that you want, because they're trying. I don't fathom her figuring out how to accomplish something, because at the end of the day, she wanted to do that for us and put food on the table.
Yeah.
And as you know, that it takes that level of grind to achieve that. So I did not really appreciate that, because I was just mad at her for it. Like, I'm dragged along in this whole thing, and
it's almost like an obligatory kind
yeah, and I don't get to see her really much. And so it wasn't until later in life, where way later, she pulled me into this business and forced me to get into it at 18. It was either I was enlisting because I was going to follow my brother's footsteps, or I'm not do something else, right? Just find my own path. And she forced me to get into mortgage. I went in kicking and screaming, because in my mind, I'm thinking all these things that she made me do as a kid, from driving docks back and forth at 16, which was a reason for me to get my license, and running errands and stuff, to then getting into the business of becoming a loan officer. And little did I know that I was really just being trained, right, to understand the grit, the grind, the failures, the overcoming that, and then gaining a passion for the business, because that you don't get until you start realizing how you help people. And you start doing that. For us, it was our own people. It was doing it for Hispanic consumers that were first-time home buyers that could never think that they would ever own an asset or a home, or what it would do for their family. And so then all of a sudden it becomes something completely different, and very fulfilling. And then all of a sudden you get obsessed. And once you get obsessed with something, well, sky's the limits, I guess.
It's hard to stop. Yeah. So I love what you said a little bit about the swap in perspective from, this is going to be difficult and this is going to be a grind, and I'm very familiar with this environment and what it takes away from my family, and switching that to, but on the other side of it, we're also accomplishing things for families and helping build legacies and wealth for some of the families or most of the families that you're putting into homes. So kind of piggybacking off of that, what's something that early on, and even today, what's something that you wish more people who were looking for a home knew about that process, to get them a little bit more, grease the wheels, so to speak, right? Because a lot of people right now are very hesitant. The market is very uncertain. There's a lot of reasons most people would argue not to do that. But I believe personally, and I think that you do too, that the benefit far outweighs the risk of getting involved with home ownership at any point, whether it's a good market, bad market, whatever. And what that does and the doors that opens for wealth and building generational wealth. So can you talk a little bit about what you wish more people would know about this process?
That's a really good question, because I don't know if it's really what I wish they would know about the process. I wish they would understand the long game versus the short game.
Dive into that a little bit if you don't.
So it's really hard to see. For most, it's hard to see into next year. For many, it's harder to see it. I mean, for then even more than that, into the next 3 years, 5 years, 10 years, 20 years. And so you need to have a really good, maybe not understanding, but a belief in long term. And in order to do that, I think you have to understand purpose. So everyone, whether it's us talking about business or customers or borrowers or somebody thinking about buying a home, they have to understand what their purpose is. What is their purpose? Is it to achieve something for themselves? Is it to achieve something for their family? And that typically comes with building something of value that is usable or transferable. And so the long game is, what will that piece of real estate do for you and your family, either or, down the road? And down the road is 10, 15, 20 years. Over the last 5 years, down the road was 2 years for some people, right?
I gotcha.
And they got lucky, and that happens. But you know why that happens? Because if you play the long game, then you will find that 1 or 2 years where
that pop.
That pop. So I would say that if more people could think long term, think way out of what something like an asset like a house and real estate will do for someone and their family or for themselves, then rate is irrespective. Right? Price is somewhat irrespective. Now there is an importance to price, but it's not as impactful when you're thinking that far out. And I think the only thing that is against you is time. So the longer you wait, the more you find reasons as to why not to get into the game.
Yeah.
You're just not in the game.
Yeah.
Right? So if you can find something at the right price, reasonable for you, because the key, I guess if the key is sustainable is the key. I got to find something that I can keep long term. And so if I can make it sustainable, if I can figure that out and make it sustainable, then I play the long game and I buy at a reasonable price. Not the best, not the worst. As long as I get out there for 10, 20 years, the only thing I want them to know is you play the long game and start now. Okay. That's it, because everything else can change. The price you pay for a property can't change, but rates will always change.
Yeah.
And that's where refinances exist.
And most people, I think, would agree that with anything, with buying a house, buying any sort of investment, there's the price of performance, and then there's the the time of performance and the time of price, right? You're only going to be concerned about price once. The rest of the time that you have that asset is really determined upon what you can do with it and how you can build upon it. Like, when you talk about the mission of Alterra and the mission of what we're doing here, you talk about building wealth through home ownership. I don't necessarily think that home ownership or building that wealth stops at one property. And so you were saying the long game and making sure that it's a sustainable model in terms of keeping those properties to be able to keep that cash flow coming in. But
that's where responsibility comes in, right? As well as grit. Life events happen, things happen. Hopefully for everyone it's on an upward slope, but it's not all the time. So people need to buy a property that they can sustain and be responsible for. So I think that's the key, right? Because you can't play the long game if you keep falling out of the game. So I think you need to get something that you can hold on to. Granted, a lot of times that means you need the grit and the grind to make sure that as life events happen, that you hold on to it. For most people, it's consistent, right? They just keep going down that path. So yeah, now, you said something about assets or I don't know, you say cars or something like that, or you said other things.
Yeah,
other
just different assets.
Different assets. There's very few assets that you could buy and use, and they go up in value over a long term. Real estate is one of those, and the stock market or the market is the other one. Everything else is extremely hard for most people to do. What I mean by that is, a car's not an asset.
No.
Now, some people might hear that and go, well, I'm really, really good at buying cars at the right price and making money on them, or buying the right cars, which means you need to spend $200,000 plus on a car to buy the right car that then appreciates in value. Otherwise, you have to be an expert, right, in the car business. So if you think about most things that people look at, it's tangible. Even kids, right, with shoes and stuff like that, sneakerheads, you have to have a level of expertise in something to actually treat it and it behaves like an asset. But that's not as true for real estate and the general overall market, right? When we talk about the stock market, right? Mm-hmm. Over time, both of those have generated great returns on the long term, on the long run. On the short term, it has its ebbs and flows like anything else. So those are the two things that you can invest in and go, this is going to be a great asset over a long time. And you don't have to do a ton for. Mm-hmm. Right?
Well, I like what you said about, housing being one of those assets that grows over time. On the opposite side of that, it's also a really rewarding career that not a lot of people would understand, that you don't need a college degree to jump into this industry and make a really good amount of money or help a lot of people. And I think that that's a huge benefit to this industry as well.
Yeah, look, the barriers of entry into this industry are low. That's great for many people. I think it poses some challenges, but for those that really want to grind and are hungry for knowledge and want to become a student of an industry, and have that level of grit and grind and the obsession of being really good at something, this is an amazing industry.
Yeah.
You said people don't go to college. I didn't even finish high school.
I didn't know that.
So, I made bad decisions, and this industry allowed me to, not have to live with those bad decisions and be able to choose. I'm gonna be obsessed, and I'm gonna learn something in and out, and I'm gonna be the best at it. And this is one of those industries that allows you to do that. There's very few that allow you to do that. So yeah, man, for those looking into this, barriers are low, which means that you're the driver of whether you succeed or you fail.
Yeah, absolutely. So let's talk about that obsession and kind of switch gears here, right? Venta Financial Group and that whole organization and what that's transpired into today, which is Alterra and Panorama as people see it today. So with Venta Financial Group specifically, do you measure the success? Because I know that Venta has since kind of been dissolved and we've updated into Panorama Mortgage Group and Alterra Home Loans. Do you measure success the way that you did at Venta the same way that you do now? And if not, what's changed and what have you learned?
I do. So measuring success, I look at it the same. I have gotten off track. The evolution of a business over time is not linear, meaning you don't just go like this, whether it's a J curve or a straight curve. The evolution of a business is like this. right? And so you go through a lot of ebbs and flows, whether it's growth related or economy or market based, right? Different changes in the economy. That evolution is an ebb and flow, not linear. But the measure, the look at success, the scoreboard has always been the same.
Okay, fantastic. In what sense?
The scoreboard for me is always financial performance and are we accomplishing our mission to how we measure our mission. So are we serving who we want to serve at the level and percentage that we want to serve? And that's number one. And at that, are we performing as a business well by putting profits into the bottom line? And that is the bottom line. If water, oxygen, and food is our nurture as human beings, then revenue, expense management, and profit is the lifeblood of a business. So the scoreboard never changes.
Understood. Okay, fantastic. So let's jump forward a couple of years, right? So now we're in 2006. Alterra's founded in 2006, and by 2007, you guys are recognized as one of the top 40 mortgage originators in the country. And most people would say that that's a pretty turbulent time to be considered, a real leading industry, an industry leader in terms of what you guys.
2007?
Yeah, that's what it says. So the numbers were, and I want to make sure that I get this right. I'm sorry. So founded in 2006, recognized by Mortgage Originator Magazine as one of the top 40 mortgage originators in the nation in 2007. And then 1 year after being recognized, the market takes a dump. And not only is Alterra being recognized as one of the top lenders, but they're able to weather the storm. Can you talk a little bit about the first couple of years of Alterra?
I think if there was any accolades in that, it was probably state driven.
Okay.
Gotcha. So it's probably Nevada, because Nevada experienced the market decline sooner than the rest of the country because of some laws that changed here regarding how you qualify a consumer. So that's probably why we were able to. But more importantly, the follow-up question was how
are you able to weather that storm as a new company?
Well, look, twofold. One is when you're a startup, when you're new, you're instantly scrappy and gritty, meaning you can't bear a lot of expense. And so therefore you don't hold a lot of expense. And so while others were trying to figure out how to deal with the risks that were taken in the market and how they adjust expense-wise to the market, we were just starting out. And that meant we didn't have a lot of legacy risk in our portfolio, and we didn't have a lot of expense because we were starting out.
Sure.
So we were just starting to build. That was one part. The other part was we were prepared for the level of expertise in mortgage operations and mortgage origination that the market needed. Actually, I think it's Thomas Edison who says it's better to be prepared for opportunity and not have it than to have opportunity and not be prepared. And so we were really, really good at affordable lending products. We were very good at structuring loan files for consumers that wanted to get a home that had a hard time getting a home. And so the market just became difficult. You have a large portion of the market doing the easiest loans they could do, right? Because you're going to go where it's easier to produce some income and revenue. And we had been living in the toughest part. And then all of a sudden the market became tough. So we were in our element.
This is our element.
This is what we do. So the hard shit, that's us, right? Being able to understand how to structure, operate, and help consumers in the hardest markets, that was a skill that we had gained and learned previously, and that helped us. So between startup and having the skill already, whether the opportunity was there or not, that's why we were able to weather the storm.
Gotcha. Okay. So for, let's just say somebody who's, for whatever reason, wanting to start, maybe an entrepreneur wanting to start their own mortgage company or other companies in general,
Sure.
What are some of the things that you learned fairly early on? And it sounds like what you just gave us one, which is establish your niche and become the master at it, because that's going to be able to provide you with an avenue through which to chase down, and then down the road you can expand and get a little bit more diverse in what you're focusing on. But what would you tell somebody that's just starting, they're in the place that you were in 2006, 2007, where, you know, like you said, you were scrappy, you were gritty, but how do you take that and run with it as a business to get new investors, to get people to buy into the mission? Like, what's...
To start a mortgage company?
Yeah.
If I can go back and tell my old self something, unit economics. What I have learned over 30 years in this business is that, number one, we are a manufacturing company. It doesn't look like we manufacture anything because we don't, this cup here, right? These shoes, we don't manufacture something we put on a shelf.
Like tangible.
Tangible, right, exactly. But we do manufacture a debt instrument, right? We manufacture a loan that becomes a commodity and is sold as something tangible, which is somebody's note, and which is somebody's debt that they want to pay off so that they can have their asset and keep their home. So we do manufacture something, and that is that paper. Understanding that you're a manufacturer and you need to understand the manufacturing process, and you have to understand the unit economics in your manufacturing company, and you need to manage to those unit economics to your competitors, to the market, to the needs of people. That's what I would say is the number one driver, and what I would go tell myself back then is to stay disciplined on those unit economics and the manufacturing process.
So we're going to be doing this thing where we close out every episode the exact same way. We're going to ask the same 3 questions of all the people that we have on the show. You being the first one, you get to go first. So 3 questions, and we'll go through them one at a time. What are you grateful for? What's something that you're still learning? And I forgot the third one already. Okay. So what's one thing you're grateful for? What's one thing you're looking forward to? And then what's one thing you're still learning? So what's one thing you're grateful for?
My family.
Your family. Okay. Well, say hi to them.
Hi, family. Get to work.
What's something you're looking forward to?
New adventures. New ventures and adventures.
Okay.
Maybe they're the same.
They might be. They could be.
Yeah.
They could be the same. And then finally, what's something that you're still learning?
Life. Life and business. This business. Mortgage. The obsession of learning this industry and this business started 30 years ago now, and I'm still learning. I just don't know it all. So, yeah.
Awesome. Well, thank you so much for being on the show. Thanks for taking the time to answer a couple of questions about us or about you, and taking some time to add a little bit of clarity to the story behind Alterra, the story behind Panorama, and the story behind Jason.
Cool.
Appreciate you.
Thanks.